Hello everybody, welcome back to The Contrarian. For those of you who might be new to this channel, my name is Logan. I really like to talk about investing, the markets, and overall opportunities out there that most people aren't talking about. So today I will be talking about why I just went long Digital World and Acquisition Corporation, or more commonly known as the SPAC, which will eventually take public Trump Media and Technology Group, which is launching Truth Social, Trump's alternative media platform, very soon. Now, this is a first for me as an investor for several reasons. First of all, I almost never purchase a stock that has bad fundamentals behind it, and the DWAC has absolutely zero fundamentals behind it right now, so that's a first for me. Also, a first is I have never purchased a SPAC before because they generally do not have good fundamentals behind them either. So this is a first for me for a couple of reasons. Because of this is a very small position for me, just a couple percentage points of my total portfolio, so it is knowingly a very speculative and small position for me, but I think it could have substantial upside in the future. And I will really lay out the reasons as to why I went ahead and purchased shares in this SPAC DWAC. Because several factors I think will drive it much higher in the coming months and turn it kind of into the next fear of missing out type of trade that AMC or GameStop or any of these other penny stocks out there have been in the last year. So first of all, Truth Social, which is Trump Media and Technology Group's first platform, is expected to be released later this month on February 21st, President's Day, which is just a few weeks away from now. So there could be a lot of anticipation and eventually people getting on board with the trade simply because of this platform finally launching. We don't know up until now if it will actually, what the app will really look like, how the user interface will be. There's obviously some alternative platforms out there that just really do not have very good web design behind them. So there's kind of some unknowns with that. So we will ultimately have those questions answered pretty soon here, potentially just as soon as just a couple weeks from now. Also, probably the largest reason is that people around the world, not just the United States, are really, really tired of big tech and the censorship big tech has been putting on just so many different kinds of narratives and people who disagree with the conventional narrative out there. There's so many examples I could touch on. Anything from the recent Canadian Freedom Convoy that has been censored on Twitter and Facebook, and ultimately GoFundMe deciding not to give the funds donated to the Freedom Convoy to the people, and ultimately, there's a lot of other examples, anything from the silencing of scientific debate around COVID mandates and vaccine mandates, etc. So there's just a lot of resentment of big tech and the censorship that has occurred in the last year specifically. Also, Facebook has just lost users for the first time in its company's history. I think this is kind of a telling sign that people are beginning to, get off of these platforms. If they're the ones being censored, or if they know of people who have been censored, they're beginning to actually leave these platforms. So the ultimate kind of test of that is, they could eventually just leave these platforms and go to a platform that is just open to free speech, that is not controlled by any sort of corporation that has incentives behind it that would get in the way of free speech. DWAC has also been a popular mention among Reddit trading groups and among other more well-known bubble chasers such as Will Meade or Kevin O'Leary. I think it's reasonable to call Kevin O'Leary a bubble chaser at this point.
And I'm speaking of, obviously, Trump Media and the SPAC deal, DWAC. What do we do with this thing? How do you even approach trying to quantify what this means and where it could go?
Yeah, this has never happened before, the SPAC deal. As most people know, SPAC deals come at 10. Often there's a PIPE associated with it so that institutional investors can price it. And after it de-SPACs and starts trading as a stock, it's the company's performance that you're watching to see what happens. And many people do not invest in SPACs. They wait till they're de-SPACed and they just look at the company from the analyst point of view and buy the stock after it's trading. This has never happened. The anticipation here is that one of the reasons Trump did this is he got muted on Facebook. He got muted, he got canceled on Twitter, which was his vehicle during his presidency to communicate directly with his constituency. So he's building his own infrastructure. And 50% of the market finds that very attractive. They are Trump supporters. They're vehemently in support of him and his voice. And you know, the best job in the world you can have is being the ex-president of the United States, because you have all this optionality. Now, I don't think anybody on that SPAC team thought this could happen. But this thing killed the shorts, slaughtered them. I mean, they just got taken up behind the barn and shot on this thing, which pushed it up in the 140s and then settled back, and then it's really volatile. But you don't yet know what Trump's going to do. I mean, you've got a direction that it's going to be social media, but you don't have any operating results yet. But I would argue as a new platform, it's going to work. There are going to be millions of people that were following him on Facebook and Twitter that are going to start following him again on this new platform, and in a way become competitors to Twitter. Twitter did this to themselves. I've never thought it a good idea to cancel somebody. It goes against freedom of speech. You don't have to agree with Trump. You don't have to agree with the people they've been canceling, but they make that decision for you, and you don't get to hear their voice. And as a result, it opens up competition, as we're seeing happen here. This is going to be highly scrutinized. There's a lot of excitement about his platform. Who knows if he's going to run for president again, but he's going to have a voice. That is for sure.
And being a bubble chaser is not always a bad thing. I'm not saying that pejoratively. George Soros actually once famously said that when he sees a bubble, he buys it. So this is very counterintuitive. A lot of the more fundamentally minded people on Wall Street will avoid bubbles entirely and actually go short them. And George Soros, I think, is more adept at seeing the bubbles for what they can be, and that is they can actually be a really good trade in the short term. In the long term, however, they don't last, but in the short term, it can actually be good to buy into a bubble. And this is fundamentally why I did take a position in DWAC, just because I think it could very well turn into the next fear of missing out type of trade, and also the next kind of, next big thing in the media, in the front page headlines. And when everybody starts talking about it, when all the traders out there start buying it, then could be a good time to actually get out. Now, looking at where DWAC and share price could go is very hard to tell. Obviously, back in October when this was first announced, the share price did reach a high of $175 per share, which was about a 6.5 billion market cap. But if we look at other bubbles in the last year, other fear of missing out type of trades, GameStop market cap was eventually bid up to around 33.7 billion. And in order for DWAC to match that in terms of share price, the share price would have to go to around $900. If you look at AMC, the market cap of AMC was eventually bid up to around a high of 37.3 billion. And so DWAC's share price would have to go to around $1,000 per share in order to match AMC. So all of this being said, this is not trying to put some sort of precise target on DWAC if it does get pushed into the limelight as GameStop and AMC were. It does go to show that the upside is significantly higher from where the share price is right now. Now, I actually did buy into DWAC a couple weeks ago, so I'm already up about 70% on my position. I'll probably put a screenshot up right now of the average price I bought in. I believe it was around $49 a share. But all this being said, I'm not trying to provide any sort of financial advice with this video. I'm simply laying out the potential of why I do think that Trump's Truth Social, why the SPAC linked with that, could face significant upside in the short term. Now, the long term is a much harder question to answer, but I do think that actually as a longer term investment as well, it might be worth looking into. I don't quite know where I stand on that right now, but just simply looking at the popularity that Trump himself had on Instagram, on Twitter, on Facebook, and all these other platforms that he was kicked off of about a year ago, it's not out of the question to think that within the first several months of Truth Social, it might be able to get, a few tens of millions of followers just right off the bat, simply because Trump himself is on there. And once you start getting more well-known individuals, perhaps putting their profiles exclusively on Truth Social as well, simply because they really hate Twitter, they hate what it's done to free speech. You know, maybe they don't agree with Trump entirely, or maybe they even don't agree with him hardly at all. But once you start getting other people switching over to Truth Social, it could be kind of a cascading event of popularity in terms of people eventually leaving platforms that have abandoned free speech. So ultimately, that's a lot more questionable in the longer term, but in the shorter term, I simply bought into it because I do think that it could very well turn into the next fear of missing out type of trade and sort of a buying frenzy that we've seen in so many other examples in the last year. But I'm really not trying to provide any sort of financial advice, so do not take this as any sort of advice to buy this SPAC at all. But I'm just laying out why I did actually go long something that I think could very well turn into a bubble in the future. So if you liked this video, if you liked what I talk about on this channel, which tends to be alternative narratives, alternative news out there in the markets that typically isn't covered, just think about subscribing to this channel. If you have any comments, leave them in the comment section down below, and I hope to see you again at some point.